What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification button as well. That way you're alerted to when we release new videos. Thanks to all those who continue to tune in. We do really appreciate it. It helps the channel grow. And thank you to all those who are new to the channel. Thank you for joining us. We hope you found a new home here. So let's go ahead and get started. The nightly and weekend videos, like tonight's video, we mostly focus on identifying triggers and targets for trades ranging from scalps and intraday short-term trades all the way up to long-term swings as well. So if you want a deeper dive into how we set the charts up with the broadening formations, levels of support, resistance, and everything else that we have on the charts, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And if you are not familiar with the STRAT, which is the base of our charting and trading method, there's a link to a free quick reference PDF guide in the description of this video. It'll give you all the basics that you need to understand the STRAT, which is basically the simplest way to look at price action, but get deep information from it, right? So it's about simplifying things to make things easier to see instead of having millions of indicators and things like that on the chart. So that is the base of our charting and trading method. And again, if you're not familiar, make sure you check out that free quick reference PDF in the description. But there's also a huge STRAT community out there on the internet. So plenty of other information out there that you can get free of charge. And there's people you can always talk to. But yeah, that's the basis of our charting and trading method. But let's go ahead and get back to the video. Again, stay with us through the whole thing. Even if you're not familiar with the STRAT, I think even without fully understanding the STRAT, you'll get a good idea of price action throughout the video today. So let's go ahead and take a look at the agenda for today's video. First, we'll go ahead and recap the price action from today, Wednesday, April 29th, before we zoom out like we always do and take a look at the week, month, quarter, and year price action. Then we'll zoom back in to take a look at our 4-hour markers and the triggers and targets for Thursday, April 30th, before we review the triggers and targets for the week, month, quarter, and year. Just a quick note, tomorrow is the last day of the month, so we will have new triggers and targets for the month, quarter, and year into the weekend video. But yeah, let's just keep in mind that we are coming to the close of the month here. So anyway, let's go ahead and get to the chart, starting with the 5-minute like we always do. This is how we can take advantage of the proven and repeatable strategy that we use, which is using the previous high a day, previous low a day, overnight high and overnight low as basically guardrails for how we're going to play price action, right? We have those on the chart prior to the price opening. Then once price opens, we also take note of where the first traded price of the day is, and that is kind of where we make our decisions from. So if we get higher lows at or above opening print, then we want to look to get into calls targeting overnight high and previous high a day. If we get lower highs at or below opening print, then we want to look to get inputs targeting overnight low and previous low a day. Always keeping in mind, with that in mind, we always want to remember where full time frame continuity is, if there is full time frame continuity. If there's not, then it can be a little bit tougher to make the trades, just because a conflict of time frames usually means more choppy price action. But it is still a great method to get not only early scalps in the morning, but early entries into what could turn into a longer day trade, right? So looking at the chart here, we always talk about a little bit of added risk when taking on the proven and repeatable strategy. Technically, when you do take a trigger that is not in line with the strategy, we can't call it proven, but you understand the added risk that there is, right? So sometimes you may not, especially with SOXL, it can just kind of take off without giving you maybe that higher low above the opening print and maybe slightly below the opening print. And, that's where your entry needs to be for the risk to reward factor, right? So here we got that this morning, right? We got the higher low, higher high, and then we're backdoor with the second higher low. So we're starting an uptrend already. We're just slightly below opening print, right? So with that in mind, we did take the added risk here today, and as soon as this 2 up went above the high of this 2 down, locking this 2 down in as a higher low, we went ahead and entered. It was basically right at opening print, and that's what the stock needed in order to take off, right? Is to get back above that opening print. Just by definition, being above the opening print is more bullish than bearish, right? So you would expect price action to go to the upside, especially if combined with higher lows and higher highs. So we can see that it took off from there. We got the gap close. Now, previous high day was very close, so it wasn't going to be really in consideration for unloading the full position. If we saw a little bit more hesitation here, there would have been more cause for us to probably get rid of part of the position just to lock in some profits and really measure what's going to happen, right? We've talked about in the past, we've shown in the past how gaps can actually be rejection or bounce points, right? Where the gap doesn't get filled and we reject off of that level once again. If you take a look here, the overnight high, it's a little bit harder to see because it's in the shaded area, which represents the gap. It was actually a double gap. But the overnight high here at 116 wasn't very much higher than the previous high day of 115.62. So if you didn't unload, part of your position at previous high day, overnight high would be another place where you could have unloaded part of the position while we, waited to see maybe were we just looking into the gap and then going to fall out. Maybe reach half gap and reject like we've talked about many times before, or was the full gap going to get filled? And here the gap got filled. So maybe it was a little bit of luck, but we didn't let go of any of the contracts here at previous high day. We definitely could have and thought about it, but we were right there at the gap, so we wanted to see how that was going to how we were going to react to that gap. We're still overall in this uptrend, right? Yeah, we had the pullback, but we made the higher low on the day. There's nothing overly bearish about the market that we're in right now. So one would think that gap would get filled to the upside, right? So we were able to get the gap fill. We unloaded half of our position at the gap fill. Didn't even wait for any decision to be made on whether we're going to press through or not. As soon as it hit, we went ahead and sold half of the position. Then we got this lower high and then the lower low here. So once we saw the lower high, took note of where the previous higher low was, and as soon as price went below that, we went ahead and sold the rest of our position, right? So good, very, very good profit actually. Could have been more if we let go of the whole position here above or at the gap close. Probably should have, just because, right, the proven and repeatable strategy, the magnitude of that move is previous high day and overnight high. Once you're above that level, then you need to start looking at what are your other triggers and targets for the other time frames. But we accomplished what we needed to accomplish and then some, so we're happy with that. We were happy to also just sit and watch our August, September, and then the January 27 and January 26 positions while we kind of went sideways through the day. We actually didn't grab any other trades, didn't really feel like it, but there were plenty of opportunities for those who are like to scalp. It's perfectly reasonable to think that after a gap close, we would go back to the opening print for a bounce if things were bullish, and that's essentially what we got. So if you took part in the downside, more power to you. I'm glad you were able to, and that's a good eye there. But if you waited for that higher low on the 1 hour and then the trigger to go back to the upside, then there's nothing wrong with that as well, because like we said, if we move over here to this hour time frame, oops, come on, get a little clearer chart, right? So we've got the hour time frame. There's the low of the day, that was the higher low on the 1 hour, and then we went 2 up. We've actually made a higher high, so we're continuing the uptrend on the hour. So probably missed a little bit of an opportunity here to re-enter and get some more profit towards the end of the day, but we were looking at a few other things throughout the day, and chips were definitely leading the market, so we were taking advantage of grabbing some shares of some other stocks at this time. So not too worried about it, because again, we do have those August and September calls along with the 27 and 28. So, it wasn't a whole lot of urgency there, but there was definitely a trigger to get back in and make some more money to the upside, right? So we got the higher low, higher high on the 1 hour. On the 4 hour, we do have the lower low, right? Here's the higher low here. Here's the lower low. We've gone lower, but now we've gone 2 up. So all that it is a broadening formation, right? If we go to there, right? So low to lower low, and this was high to higher high. There we go. So we've got this very vertical broadening formation here, and then a pretty it's about a 45 degree, so it's definitely not horizontal, but it's nowhere near the vertical angle that the upside has, so it would lend itself to lean more bullish here. But again, it's we made the lower low, but it's not the end of the world, because we're coming from a higher high and we're just creating the broadening formation. If we looked at the week, that would look very familiar, right? Where we put in a higher high, lower low, and that was actually the point where we took off from. So we'll look at that here in a second. But again, on the 4 hour, nothing wrong with what we're looking at there. If we go to the day, right? Again, we made this higher low. Going to just see if can we make that higher high, right? We triggered the 2 down, 2 up. We talked about that yesterday, how it was pretty big move there, so we probably weren't going to reach magnitude, but wouldn't surprise me to continue this tomorrow for the 2 down combo, 2 up to reach the magnitude. Also, we've had some earnings reports. We're big tech earnings zone right now, and we can see, oh geez, we're up past where I was looking at before. So I'll have to adjust the overnight high settings or levels, but we're already up to 121.36. So it's actually probably past a couple of the targets that I had marked earlier today for tomorrow's price action. We'll see here in a second when we get to the notes. But again, on the day, higher low. So let's see if we're going to make the higher high. If so, we're just continuing this uptrend. Even if we go sideways, we're just starting to look at like a bull flag situation, right? So just keep that in mind as well. Speaking of that week real quick, as we zoom out a little bit further here, oops, what's going on? There we go. Speaking of the week, let's just clear this up a little bit more. So if we take a look at this is that higher high, lower low that I was talking about that we actually rocketed off from, right? So on the week chart, here's our higher high. It was slightly higher than this high. So here's our higher high. We made our lower low here, and then we just took off, right? So again, a lower low after a higher high is not the end of the world. It's neutral at worst, in our opinion, right? So especially with everything else in the uptrends that they're in. Okay, so doing well from the week perspective. Again, we're still an inside week, but we're back up in that upper half of last week's price action, almost in the upper third, probably is the upper third. And then with the overnight price action, we're up here even a little bit further. So coming towards the end of the week, 2 days left in the week, can we continue to what we call hammer up or create a hammer type of candle, which it pretty much already has. And not only can we make a hammer, but can we make a green hammer, right? So we're a red hammer right now, but can we make this a green hammer? And if we do, we're probably going to go 2 up as well. There's not a lot of distance there between going 2 up. So if we do, again, it just continues this uptrend. We got a quarterly broadening formation here in yellow, another weekly broadening formation here, another monthly up here, and then the final quarterly broadening formation up there. So there's still a lot of room that we can go here. Oops, if we can just scrunch this down so everybody can see, right? So these broadening formations are from 2020, right? That's pretty much when the market changed, right? There was I guess we don't need to rehash what happened in 2020, but that brought in a bunch of new retail traders. Things started trading a lot different than we were trading prior to this. So that's why I kind of use this as a marker, a major, kind of milestone marker. And we've got broadening formations coming from that change in how the markets, are behave. And, again, it's not the huge change, but it's enough to know, if you were trading before 2020, you understand what I'm talking about. It drastically changed. And you could actually kind of see it start to change late 2018 and then through 2019. But anyways, I digress. On the week, we're looking good, right? So let's go to the month real quick. Oops, that's not what I want to do, right? Month, we went 2 down last month for the higher low. We've taken off. Not much else to say about this. We've blown through a couple of monthly broadening formations from that April 7th low last year. So now we're looking at, that we had the bear market in 2022. basing in 2023 where we created the broadening formation, and 2024 made that high, came down, made the low in 25 to again make the bottom of that broadening formation, and now it looks like we're going back to the top of that broadening formation. Does that mean that once we reach this, we're going to go back down to the bottom of the broadening formation? Not at all. You can see how this has gone through those two monthly broadening formations, but it does give us an area to look at. Okay, price could slow down here, could go sideways, could pull back even, because even the pullback doesn't mean we're going back to the bottom of the broadening formation. But it is a point where we would expect, in terms of, or in STRAT terms, we should expect to see corrective activity here, right? Where we get a little bit more of a fight, right? So, that's what we got from the month, the quarter. Again, not a lot to say here. Early on or late 2025, we had the trigger of the one combo 2 down, combo 2 up, which gave us a magnitude up here at 70.08. First quarter of 2026, we continued that and reached magnitude, and now we're just blasting past that. So not a lot to say there on the quarter. And then on the year, we went 2 down, 2 up very early in the year. Again, the magnitude of that move was 70.08, which is the high of the candle to the left of the 2 down. Obviously, we've blown through that and just continue to go from there. So not much to say on these higher time frames. The week and below are really what we're looking at. And even right now, it's more, 4 hour, 1 hour. That's determining, what we've got going on. So, that's what we've got from the, looking at today's price action as well as a zoomed out view. So hope that was helpful to everyone there. Let's go ahead and zoom back in now and take a look at what we call our 4 hour markers and the triggers and targets for tomorrow. Just look at how we're going to attack the day, right? Overnight high, we know, is much further up here. What was it, 121.95 now? So basically 122. All right, so let's just say 122.50 is the overnight high, right? We do have overnight low down here at 112.37, basically equal with the previous low a day, and then previous high a day is obviously 118. So if we do get price action to the upside, if we gap up, previous high a day is going to be out of the picture as far as upside targets, and overnight high will be the only one that we have. And then if we open with a gap up and we push down and still end up making lower highs, previous high a day is actually going to be one of the targets to the downside as opposed to the upside, right? So be previous high a day, overnight low, previous low a day will be your other targets. But yeah, it's basically real simple, right? Where do we open, right? Let's get the right tool. There we go. Let's say we do gap up. We open somewhere around the 461.8 fib extension from the April 7th low. And let's say price action goes to the downside first. Maybe we close the gap and we bounce off a previous high a day. Okay, that would be great, but we do still need to get back above previous high a day in order for things to really be bullish from an intraday perspective, right? It doesn't mean overall, because we're obviously going to be bullish if we're gapping up or continuing to stay to the upside instead of just dropping immediately, right? But if we push down, maybe we get a bounce, but ultimately we do get that lower high at or below opening print. Again, we're looking to get into puts, and our targets are going to be previous high a day, which isn't normally the case, but because it is to the downside, previous high a day is going to be your first target. And then overnight low and previous low a day are going to be your magnitude for that move. At the same time, if we open and we push up, maybe we get a rejection off of overnight high and we pull back, but we get some type of higher low at or above opening print. Overnight high is going to be the only target to the upside for as far as the proven and repeatable strategy is concerned for those early morning scalps. But we have notes for the 4 hour, the 1 day, 1 week, things like that we'll get to here in a second that you can look to as your further targets should we continue with momentum through that overnight high. But ultimately for that proven and repeatable strategy for those early morning scalps, that would be the magnitude of the move. Okay. Again, on the 1 hour, we talked about we are in an uptrend. On the 4 hour, we did put in that, we did put in that lower low, but again, coming from a higher high, right? So just want to keep that in mind. On the 4 hour, if we do go to the downside in that first 4 hour candle, that will give us a 2 up, 2 down reversal. So very clear entry at the low of the 2 up, very clear exit at the low of the 2 of the candle to the left of the 2 up. And there's actually some okay magnitude there, right? About $2. So if you get it just right, then you can make some decent profit, especially if you're at the money, in the money, especially if you have multiple contracts, right? So not a bad move to the downside, but I wouldn't look for too much follow through. But at the same time, we talked about yesterday, we closed with that 1. So even if we go 2 up in that first 4 hour, watch how it closes, because there's a possibility of the 1, 2 up, 2 down. Well, we went combo 2 up, but we barely went higher in that second 4 hours. So I would still leave on the table a 1 combo 2 up, 2 down. If we were to go 2 down, which would take us all the way back down here to the low of the 1, the candle to the left of the 1, down here at that 103 area, right? So I don't think that's as likely, but if it does happen, if the right catalysts come out, in the morning, to overweigh the earnings from after hours today, then we could get that push to the downside, right? And that would give us a lower high, not only on the 4 hour but on the day as well. So it's not totally off the table. You have to play devil's advocate with yourself, right? Otherwise you get biases, and you're only looking for certain things, right? You got to keep your mind open to anything, and that's how we are able to make money no matter which way the market goes, right? Staying flexible, right? But if we do continue to the upside, that does trigger this 1, 2 down combo 2 up, right? It doesn't trigger it, it re-triggers it, because it was triggered here in that first 4 hour candle. And then the magnitude of that move is not the high of the 1, but the high of the candle to the left of the 1, which puts us back at this week's highs, last week's highs as well. So potential for a pretty big move tomorrow, right? One thing I will mention, market makers expected move low is 108.04. So even if we do trigger that 1 combo 2 up, 2 down, it's a very good possibility it doesn't reach magnitude, and we just bounce for a higher low here. And now we're looking at possibly putting in a higher high, which would give us higher low, higher high. It would give us a high, higher low, higher high, which would start an uptrend, right? So that's what we've got on the 4 hour. It really could go either way, but it does feel a little bit more bullish than bearish. So just want to keep that in mind. On the day, remember we put in that higher low triggered by today going 2 up. So we did trigger a 2 down, 2 up, which magnitude is the high of the candle to the left of the 2 down. So again, this week and last week's highs would be the magnitude for that move. But again, at the same time, we talked about on the 4 hour, a 1 combo 2 up, 2 down would trigger. From the day perspective, that would trigger a 2 up, 2 down. And again, that brings us back down to that 103 level, right? So that's what we've got there. We've looked at the week, month, quarter, and year. There's not a whole lot to do there. So let's just go back to the notes at this point so we can look at the hard numbers, right? So for Thursday, April 30th, there'll be 170 trading days left in 2026. And the close price on Wednesday, April 29th was 117.97. We do know the week is still red. We've got to get it back above that 128.32 level to flip it green. But the month, the quarter, and the year are all green. So those are the levels it would take to flip us red. We're obviously quite a ways from doing that. We know the market maker's expected move was plus or minus $2.28 from the close on Friday, giving us an expected range of 148.60 to 108.04. And we know that we closed that gap above today, so there's no more gaps above, but we do have plenty of gaps to the downside, right? We talked about from a scalping perspective, early morning scalping perspective, you want to look for higher lows at or above opening print to get into calls, targeting overnight high, previous high a day, or we want to look for lower highs at or below opening print, to get into puts, targeting overnight low and previous low a day. On the 4 hour, we just talked about if we do go to the downside, it's a 2 up, 2 down, and I actually forgot to put it is a 1, 2, combo 2 up, 2 down, right? So 114.35 is the trigger of the 2 up, 2 down, and the magnitude of that is that 112.30. We've got a couple of intermediate targets should we, trigger that 1 combo 2 up, 2 down, because the magnitude, which I've left off, is that 103, what was it exactly? Low 103.99. 99. Okay, there we go. Oops, I had it here. Why didn't I have that? Anyways, so we talked about to the downside, and then the 2 up, 2 up, it does trigger at 118.32. We got some intermediate targets, and actually I forgot on the 4 hour as well. That puts a 1 2 down combo 2 up, and that magnitude for that was high 129.59. Oops. This is 129.59. Okay. So we do have some intermediate targets, probably a couple more that should be in there. What did we have? 125.50 was our last. No, 122. Okay. Yeah, that's what it was. 125.50. Right. And 128.32. Okay, there we go. So we've got 2 up, 2 down possibility, which could turn into a 1 combo 2 up, 2 down. Big magnitude there, but again, that's the downside. We're in this uptrend. Not sure if we'll make it there, but we got to keep it out there in case. And then again, the continuation to the upside would actually trigger a 1 2 down combo 2 up at 118 with the magnitude up there at 129.59. Same thing, even with the uptrend, $11 in the day. I mean, we've seen it done before, and we've seen it done recently, but because we saw it done so recently, kind of lowers the probabilities of it happening again. Not to say that it won't, and that's why we've got it on here on our triggers and targets. But yeah, that's a pretty big move, right? On the day, again, if we go to the downside, that gives us a 2 up, 2 down trigger at 112.30. A few intermediate targets here before the 103.99, because again, that is a pretty big magnitude there in the face of an uptrend. At the same time, on the upside, we would have a 2 up, 2 up, which would also trigger a 2 down combo 2 up. So we have the 118.32 as the trigger, some intermediate targets for you here as well, before finally reaching that magnitude of 129.59, which is the magnitude of that 1 2 down combo 2 up on the 4 hour, right? We talked about on the week, we are inside. 92.03 would put us 2 down, a bit of ways from there, but we're still a bit of ways from 120 or 130.12 as well. So not seeing us going 2 up or 2 down tomorrow specifically, but possibly by the end of the week, it is still a possibility, right? But then on the quarter, we've already run the strat, 2 down, 2 up. It's reached magnitude. I'm sorry, that's the month. The quarter, we're just continuing the uptrend. And then the year, we ran the strat as well, 2 down, 2 up. We reached magnitude. So again, on those high time frames, there's not a whole lot to look at there. So that'll kind of do it for today's video. Try to jam in as much information as possible without taking up too much of your time. So I do hope you enjoyed the video. If you did enjoy the video, thumbs up goes a long way, right? It's a free video, free channel. We don't charge anything. So a thumbs up we would really appreciate, right? It just helps the channel grow, and it helps us to try and achieve our objective, right? And that's just to help as many people as we can be a little bit better at trading, make things a little bit easier, so that you can bring home a little bit more money and with more consistency, right? That's the key to the game, right? Everybody can hit randomly one at a time, once every so often, right? But when you put the consistency in the mix, which comes with a proven and repeatable strategy, it really changes the game, right? So that's why we're not in this in the YouTube to try and make money. We're making our money in the market. That's not the issue, right? So our thing is we just want to grow the channel to help as many people out as possible. A lot of people don't know about the strat. In our opinion, it's the easiest, flat out easiest way to read price action while still getting a lot of detail. And we want to try and help continue to grow that strat community. Like I said, there's a strat community. We've been a part of it for years and years now. But we just like to add more people to it because we think it really helps, right? So that's what we've got for today's video. We'll go ahead and wrap it up at this point. Again, thanks to all those who have stayed with us through the end, through the whole video. We'll go ahead and wrap it up like we normally do. If you're watching this Wednesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Thursday morning or Thursday during the day, we hope you rested well last night, woke up refreshed this morning, and we look forward to getting out there and trading with you.